Welcome to the Del Walmsley Radio Show. Listen and grow as Del questions the status quo, encourages you to think differently, and empowers you to make a better life. Get ready as Del challenges core beliefs, seeks the truth, and reveals the roadmap to the lifestyle you really want. And now your host, multi-millionaire, national award-winning investor, CEO and founder of Lifestyles Unlimited, Del Walmsley.
Welcome to the Del Walmsley Radio Show, where the hype ends and the help begins. I'm your host, Del Walmsley, and as always, we're working on your financial freedom. If you've been following me for the last couple of weeks, months, you'll know that the marketplace is starting to turn around, and we're looking forward to some really exciting things happening for us here as buyers of real estate as opposed to sellers of real estate. We've been watching a seller's market for the last 5 years, and now finally we're starting to see it turn around to where the changes that the Fed has made, which has raised interest rates, the higher cost for insurance, the higher cost in property taxes, those types of challenges have forced sellers to realize that their prices have to come down, and they're bringing the prices back down to realistic prices. In fact, in some cases, they're bringing the prices down to below realistic prices because they are upside down on mortgages that cannot be gotten out of. And so in those situations, we were able to come in and help out the mortgage companies by taking those deals over. And in our other cases, we've actually told the mortgage companies we don't even believe that what the amount of debt that's on the property's not even worth that, and we want to pay even less. And they're even coming around to those types of suggestions. So what am I seeing? I'm seeing a marketplace that's starting to look like the beginning of 2008, when I made probably the most money I ever made in my entire life. I bought, probably 2,000 units in 2008, which doesn't sound like a lot, but I was buying them and making massive, massive rates of return. I mean, we were in the 300 percentile rate of returns to 400 percentile rate of returns, and they were some incredible deals because the market did the same thing it's doing right now. It's squeezing out the people that are bad operators and people who got into deals under funky deals or people who have paid way too much, and they're finding that out on the back end now. And so as the cost of operation goes up, that overpaying of price, that price that they paid above and beyond what they should have, is starting to come back and haunt them. So now what does that mean for us? That means those are opportunities, right? Those are somebody else's problems or our opportunities to take advantage of. You say, well, what about you? I said, no, all my properties and all the properties I looked at this week, we've been going through our properties. The people are doing great. They're fine. It's not a matter of real estate is doing terrible. It's a matter of people positioning themselves in deals that don't make sense. And then when the marketplace has stressors like increased interest rates, like increased taxes or insurance, these people can't play the game. And so they lose. But the real estate is still a great thing. Let me give an example. Interest rates out there right now are in the mid to high fives for apartment complexes. And I think a little bit higher than that for single-family houses. I'm not sure. But when I first started in real estate, interest rates were between 11 and 13%, average 12% type interest rates. Made money with real estate with 12% interest rates, made money with real estate at 9%, made money with real estate at 8, 7, 6, 5, 4, 3, made tons of money. But as each time the interest rate went down, the prices just simply went up to offset that position. Now the interest rates are going up and the prices have to come down. And the people that can't play that because they juxtapose themselves into a position that they cannot get out of, those people are now going to eat it. So what do we got going here? What we've got going is I'm doing everything I can do on all ends of my company to get these deals out to my members. For membership, if you are a member, we have a deal tonight. We have a meeting where they're going to present deals. We've got deals that are being presented today that are from Tennessee, Texas, Missouri, and Kansas. So they're all over the country. And I intend to continue to bring these deals to people all over the country, to members. No matter where you live, you can get into these deals and or buy these deals yourself by yourself. I'm also going to start introducing brokers and agents from my companies. Most of you don't realize this. You say, you don't realize that I own real estate companies in 10 states. And so I guess it's time for me to get that message out there. Now, why did I do that? Well, because I have members in 50 states. And wherever there's good buying opportunities, we want to have brokers and agents available to find these deals, because we believe you can live wherever you want to live and buy wherever you should buy. But to buy in those marketplaces, we need representation. We need people that understand the market. We need people that know how to find the deals, tie the deals down, and get them back out to the rest of our members so they can take advantage of them. And that's why I intend over the next couple of weeks or months to start introducing some of these people to you so that you can get to know them and contact them. And I'm not sure how they want you to contact them. We'll find out here when we get them on here. But the first individual I brought in today is Darlena Kinnett, and she's out of Georgia. Darlena, welcome to the show.
Thank you for having me, Dale.
Well, let's talk here, Darlena. We're seeing a rise now in opportunity everywhere I'm looking, myself included. A guy called me back for a deal yesterday that I'd offered him 3 months ago. And he said, no way, never in a million years. In fact, after nobody bought it, he pulled it off the market. I got a call back yesterday. Hey, let's go into contract. And I'm like, they said, do you want to do it? I said, of course I want to do it. I said, that was the price I was willing to pay. It was a good deal at my price. It wasn't a good deal at the price they wanted. And so now the deal's being done. What are you seeing out there right now before we get into you and talk about you for a second? We will come back to your personal life a little bit, but I just want to talk right off the bat to capture people's attention. What are you seeing in the marketplace? Is Georgia running into the same situation where these deals are starting to fall out?
Deals are everywhere in Georgia. We have deals going out every day to our members, and it's a hot market. We're selling. The big thing for Georgia is cash flow. We still have very strong cash flow despite the rates being close to that 7% interest rate.
Okay. 7% interest rate is what you're getting for single family or multifamily?
Single family, it's right about 6 3/4 right now.
Okay.
Depending on your lender, but 6 3/4 is what it was yesterday. So we try to keep up with those interest rates and make sure the numbers work.
Now, are you guys selling both single family and commercial in Georgia?
We are selling single family and multifamily. We haven't got into the commercial market yet.
Okay, so both single family and multifamily. And you're finding deals in both?
Yes.
So let's talk about you for a second here. Wait, now we're coming up to the end of a break here, so we don't have a lot of time. I don't want to short you on your time. If somebody wants to contact you, let's get that in case somebody has to pull in and go to work right now. How can they contact you?
Well, I would say go to the Lifestyles Realty webpage.
You had not been a Lifestyles member. You didn't understand that right when you were deciding the real estate sucked and wanted to get out of it is when I was making my mega millions of dollars. Can you follow up on that conversation just a little bit?
I went into real estate, what we call retail real estate, where you're always having to market yourself. And then in the 07-08 downturn of the real estate market, that retail side of real estate completely dried up. So I exited real estate, went back in my W-2, and where I stayed until 2020, really 2020. I became a member. My husband and I became a member in March of 2020. So that very high point of COVID, and I had been to work from home due to the COVID situation, and really immersed myself into lifestyles, into the education, got very excited about what we could do for ourselves through investing, and that was our pathway to a retirement. So I quickly got through my education, got my single family certification, and said, okay, I'm ready for my blast. Where are my blasts? So, and I wasn't comfortable enough to buy in Texas, and that's where the blasts were, sourcing properties. So I reached out to our VP of Realty at Lifestyle and said, hey, why don't we have real estate in Georgia? So long story short, after probably, she would say, a million emails from me wanting to make this happen, I went back into real estate, helped open the office in Georgia, and here we are in our second full year last year with Lifestyles Realty, we were third in real estate sales.
Excellent, excellent. So the point I'd like to get across, Darlene, if we can, and this is no real, it's not meant as a slight to you in any way, shape, or form. It's really just an opportunity for people to learn from this, is that even though you've got massive financial background, even though you were a real estate salesperson, when the downturn market hit, you didn't see the opportunity in it, and you could have made millions in it. But even though you were infinitely qualified financial number understanding wise, being in the business wise, you still didn't see it to take advantage of it. Is that true?
That is absolutely true. The one thing that is common with myself and any other lifestyle member, if you ask them, and I wish I had the education 20 years ago, because I would have been like Del Walmsley and made millions.
So here's the beautiful thing, Darlene. Now people want to go do this stuff, and they can find somebody like yourself that actually does understand it. And that's the key to all of this, is that if you understand what we're going into right now with this now receding market prices, receding market conditions, this is the time to make money in real estate. And people are going to go out there right now, Darlene, and they're going to go, yeah, I heard this on the radio, and a real estate agent just as nice and smart and kind as you is going to go, oh, that's crazy. There's no good deals right now. The prices are all wrong. The prices are going down. This is a bad time to own real estate, are they not?
They are, and I would say they're not educated enough to understand buying on the way down is the way to buy.
That's our task right now. See,
Absolutely.
We have to get that message out there. And, last time, Lynn, which is our executive vice president for Lifestyles Unlimited, for those of you just tuning in, she's the second highest person in my company. She laughs all the time that back in 2008, I was screaming at the top of my lungs, buy, 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 buy. And after a while, people started following me, and quite a few people made a lot of money, but we were making 300% returns on some of these deals, just incredible returns. And we bought everything that we cared to buy. And I say cared to buy because if I would have been smarter, I would have bought more, but I was the same way as everybody else. I mean, I was buying as much of it as I could convince myself to buy, but it was so much of it out there, you were like, wow, should I really do that much? And the bottom line is I probably should have done a little bit more, or maybe a lot more. But either way, I quadrupled my net worth, and I've looked at it a couple different ways, and anywhere from tripled to quadrupled my net worth from that 2008 to 2010 period of time. And that's what we're looking forward to people getting with you and getting out there and doing. That's the excitement that I have planned for you guys. Again, how can people get in touch with you?
I go to the Lifestyles Realty webpage, and all of our agents are listed with their contact information on that page. So you can search by state, select Georgia, and see all of our agents. I'm there, and I have 7 additional agents serving properties in Georgia.
Now, just on a sideline, are you a vet?
I am not a vet. My son is. My son's in the Army.
Okay.
He has served, it'll be 17 years in August, and he's got 3 more to go, and he's going to retire, being a very smart man. And guess what he's going to do when he retires?
Let me guess. Real estate?
He's going to invest in real estate. He's going to get educated with Lifestyles and turn all of his money into lots more money. So,
all right, Darlena, thanks for coming on. We really appreciate it, and we look forward to doing business with you in the near future. The rest of you out there, remember this. We'll be right back with the Del Walmsley Radio Show.
Teaching you with a roadmap to creating the lifestyle you really want. Keep listening. The Del Walmsley Radio Show returns in moments.
Successful Lifestyles Unlimited member retires in 10 months. The hardest part for me was to drop off my son, go to a job that I absolutely hated for 5 years, but know that that was a sacrifice that I needed to make, and then only be able to get to spend 2 hours with him after school before he had to go back to bed. So that's why once we started and we joined Lifestyles, we said, okay, we have a roadmap. We know what we're gonna do. And then a month later, we find out we're pregnant with baby number 2, and we're like, okay, we gotta kick it up a notch. So that's how we were able to purchase 4 different properties and replace in 10 months, replace my income in 10 months, so that whenever I finished maternity leave, I didn't have to go back to work.
I think a couple weeks before baby came out is when we closed on our 4-plex, and that was enough for her not to have to go back to work.
Are you ready for your roadmap to real estate retirement? Attend the online free workshop, just like Carolina did. Register at lifestylesunlimitedworkshop.com.
You're hearing the Del Walmsley Radio Show. Want more life-changing knowledge? Access our podcast and listen on demand at lifestylesunlimited.com under the radio tab. Now your host, Del Walmsley.
Welcome back to Del Walmsley Radio Show. Today, I started the show with introducing you to one of my sales brokers out of Georgia, and I hope you'll realize that we have real estate brokerage firms all over the country. So if you're looking to buy, whether you're a member looking to buy somewhere other than where you live, or whether you live somewhere other than where we have an office, we're out there. And these deals are occurring, and if you don't get on them, in fact, I'm going to tell you this point. It's 2008. I screamed and yelled at the top of my lungs that you need to be into this stuff, and people didn't listen. I made mega millions of dollars during that 2 or 3 years after that period between that time and when the market turned around. And I've always felt like, why don't people listen to me? I'm going to try it again. It's starting to occur. I've been through this marketplace 3 times now. It's the 3rd time I've seen a recession occur, and this isn't really even a recession. This is just the real estate market being jacked up by the situation it's in. And it's creating opportunities for us to get some really great deals. I'm going to yell at you and scream at you as loud as I possibly can. I will be annoying to you probably. But by the time it's over and I've made all this money, and or all the other people that have listened to me made all this money, I'm not going to feel bad for you if you don't do something. You have to take action. I can't do it for you. Now, moving on, I promised people yesterday that I would cover 4 or 5 emails, questions they had, and couldn't get to them, so I'm going to go ahead and take the rest of this show to finish them up. The first one says, I hope you get to read this letter. I would really like to know what you thought of my situation. I'm a single mother from Missouri that has 4 boys. Goes on and says, I've listened to you for about 4 months now, and I have taken the online classes. I have joined Lifestyles Unlimited. I have signed up for 2-day, but at the time I couldn't make it. I'm currently going to do it online. So she doesn't have all the information she needs yet. So I can understand where her question is, but I think it's a question relevant to a lot of people out there, so I'm going to go ahead and bring it up. It says, I have lived in a home for almost 5 years, and I really want to make it my forever home. The only debt that I have is my car and home. I really want to remodel my home, but want to be smart in doing it. Everything is outdated, and it needs new flooring, painting, light fixtures, sink, etc. I'm embarrassed as I don't want anyone to come over. So my debate is I don't want to cut into my dollars for what I want to invest in rental real estate. I have $48,000 saved and $23,000 in 401k, which I am not contributing to anymore. Good move. I have about $2,000 left after I pay my bills each month. Great. And that's after putting $500 into saving. That's after saving $500. My house has about $30,000 in equity that I can get to, and that's the key factor, is that she can take out. And I'm dumb. Am I dumb to take out the equity loan and upgrade my home, or should I put it all into rental real estate? I know it's not about the money, it's about the lifestyle, so I'm debating, should I feel better in my own home or buy rental real estate? All right. This is a dilemma that hits everybody. The balance between it's not the money, it's the lifestyle. And in this particular case right here, this lady is a startup. She doesn't have the wealth that she wants until you, and here's really the rule of thumb, until you have as much passive income as that you can support yourself on, or as if you're beyond supporting yourself, you have enough that gives you everything you want to do and play and have fun and whatever, then you should always keep putting your money back into buying more investment assets that can produce more passive income for you. So this lady should go ahead and take that money and buy investment assets with it. So in this particular case, she could buy at least 2 rent houses with that, and maybe even more if she could figure out how to get to the money in the 401k. But at that situation, she should be making at least $500 a month in each of the houses. So that's another $1,000 a month she can save. If she's already saving $500, she could save at least $1,500. And I bet if she saw how exciting this is, actually, she probably could save another $500 out of that $2,000 extra she has left over. So she'd be saving about $3,000 a month, which in turn means she can buy a house about once a year. And you say, well, Del, that's only $3,000 times 12 is $36,000. Yeah, that's enough, but you probably could buy 2 a year, because when you start learning how to use hard money lending correctly, you're going to be able to get into houses for in the $10,000 range. To teens, 10, 15,000 range. I see it all the time. It happens. And so once you get good at this, you're going to be able to get in for less money down in each and every deal. It's just a matter, you got to get good at looking for the deals that those numbers make sense and wrap around with the hard money lending. Then, as far as remodeling her house, if she's got this positive cash flow, she could take a little bit of the positive cash flow and pick one project. Maybe every 6 months she wants to work on and just do one project. And that way she ends up getting both things in life, But right now, where she's at, she definitely needs to take her money and stick it in some rental properties. All right, next one. My wife and I are currently 3 months in 3 passive deals with LUI leads. My question is, are we still considered new investors when we talk to other leads about up-and-coming opportunities? The answer is no. If you've taken the training classes that we offer for passives and you're already evaluated and got invested in 3, then you are basically a sophisticated investor. You are of the understanding how it works and why you're doing it, so that makes you a sophisticated investor. And you can present yourself as such when you go to the new leads. You don't have to present yourself as a newbie anymore. All right, next question. Let's see how much time I got. I got time for another one. Met you at the 2-day in Hawaii earlier this month. Hope you enjoy your stay in paradise. Hope you enjoyed your stay in paradise. My question is, in regarding to supplemental loans, are there pros and cons to doing one in multifamily? And the answer to this is, I had actually 2 consultants come up with the answers to this. It's a very long answer, so let's see what they had to say, because there really is a lot of concerns, and I told them they should really get with their mentor on this, but let's go ahead and hammer out what these guys said. First one said, a supplemental is almost always a part of my plan when I do a long-term agency loan. Note that you must execute it with no less than 60 months remaining on your loan, and that the combined leverage on the primary and the supplemental loan cannot exceed the original leverage on the primary. Also, the rate on the supplemental is normally higher than a primary loan. As Curtis mentioned above, it's a great way to get your added equity out of the deal to invest in another. It's a tax-free. In other words, you pull that money out, you're not paying taxes on that money you pulled out with that supplemental. One con, I will add, also increases the future exit prepayment penalties. If you exit, sell before the loan expires. So consider your long-term plan for the asset. You don't want to increase your prepayment penalties to come back and bite you upon the sale. So in other words, what he's saying there is, you had one prepayment penalty on the original loan, and now you have a secondary prepayment penalty on the first. But to say that refinancing and taking out supplemental loans is something we like to do, I would say it is one of the number one techniques we've used for 30 years, because you don't want to give up the asset. So you go buy the asset, you increase its value, and let's say you put $2 million down on the asset, and it doesn't matter. You could be 1/10 of that and have $200,000 in it. You could have $50,000 in it, whatever your share is. When they refinance the deal, everybody gets their money back, or some portion thereof their money. or maybe more than their money even. It just depends on how much you can refinance out. And now you've got your money or some portion of your money back in your hands, which you can go invest again. And yet you still own the asset. You're still getting the cash flow. You're still getting the tax advantages. You're still getting the appreciation of owning the asset. And that's really how this stuff builds up. You can layer that, layer upon layer upon layer upon layer of these deals. And some members, just to give you an idea, I have some super passives that have anywhere from 50 to 80 deals. And they just started out with maybe buying, small parts of 5 or 10 deals, and those deals, they flourished and they refunded them money back, whether it be from a refinance, which is the optimal situation, or by selling. Then when they got that money back, they got more back than what they put in. They deployed that money again and leveraged up. All right, so I'm going to go back to the mailbag here. I've got a couple more questions. The next one is, I listen to you every morning, and I'm having a problem with lenders. There's so much red tape now. I desire to build a relationship with one. What do I do? This is a guy that's on the radio, by the way. He's a radio show host. He asked me to come on, but I'm too busy to come to his radio show. But the bottom line is that the old day theory that you could build relationships with bankers just doesn't work anymore. Why? I've got relationships with tons of bankers. It doesn't do me any good. Why? Because the market is the market. And the lending companies, the actual companies that lend the money, are not controlled by the brokers / salespeople that sell the loans. The mortgage brokers don't control the market. They can't control the deal. And they can't control the requirements for the deal. So when they get like they are right now, think about it. Banks are really leery. They've had a couple banks go under. Interest rates are really, really high. They've got loans out there at very, very low interest rates, so they're getting paid very, very small amounts of money for the money they've lent, and they have to pay very large amounts of money to bring new money into their bank to stay liquid. They're very, very risk averse. And when you're risk averse, then what you do is you tighten up your lending qualifications. And that's what they're doing. So there's really no getting some lending buddy that's going to lend you some super tricky deal because of it. Now, caveat, where that may not be the case, where you may be able to create a relationship that is beneficial to you, is with hard money lenders. And I have my own mortgage company. And if we've got somebody that we've been doing deals with, and that person's really good at what they do, and they come to us and say, here's what I'm going to buy, here's what my rehab's going to be, lend me the money for the purchase and the rehab, and get the deal closed for me ASAP so that I can win the bid by having the best and quickest offer to close. We'll do that with them because these people will complete the project on time, at cost, and our money is safe. So we are going to prefer lending to them, and we will really stretch what we can do for them, maybe go out of our ways in some cases to make some of these deals work. And that's where you can build a relationship. So I've got a mortgage company called Lifestyles Finance. And if you look that up, Lifestyles Finance, you could work with our people, and maybe you can build a relationship in that type of a case. But when you're talking about Fannie Mae, Freddie Mac loans, you're talking about our brokerage firm, and anybody else's brokerage firm has no leeway. Whatever the requirements are, that's what the requirements are. Now, caveat on that one more time, and that is some lenders are direct lenders who have the right to make the decision that you qualify for all that stuff. And when they have that right, they're the one making the decision you do or do not qualify with whatever those rules are, as opposed to sending your paperwork to Fannie and Freddie and letting them bless it for the deal. I think those kinds of people are easier to work with because they can tell you straight to your face, we can make this work or we can't make this work, as opposed to sending it away. So there you go. That's the last question of the day. We don't have enough time for the last one. There's actually one, but we'll go ahead and leave with this, I think. It's time to get out there, guys. The best time to invest in real estate was 20 years ago. The next best time to invest in real estate is today. Because even if it's not the money, it's the lifestyle. You still need the money. Have a great day. We'll see you tomorrow.
The information and opinions you hear on the Del Walmsley Radio Show are those of the host, Del Walmsley, his guests, and his callers. The Del Walmsley Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Del Walmsley Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.